Well, good morning, everybody, and welcome to the masterclass on the perfect pitch. If we, just as a way of kicking off, I think you've met, obviously, Richard and myself before, but it's probably worthwhile putting ourselves into the context of where we've been involved in pitching in the past. Perhaps if I go first, and if, just to remind yourself, I'm David Mellor. My background with pitching is that I've been working over the last 20 years in various forms of investment, including co-leading a big management buyout of the business that I was growing at the time. That involved pitching for circa 20 million US dollars. I think that effectively the translation would be to a series of big private equity companies in London. Since then, which is obviously quite an interesting experience and learned something en route. Since then, because I'm also what's classed as an angel investor, so I also invest in early stage businesses, I've also been on the receiving end of many presentations, and as a result of that, I've invested, and in some instances not invested. So I've been used to seeing what is a good investment, what a good pitch is, and what a poor pitch is. So over the years, acquired quite a lot of experience on that. And giving a sort of masterclass on pitching is something that's fairly fundamental to what we do here within the STEAMhouse as well. So at that point, I'll reintroduce Rich to tell you a little bit more about Rich's background.
Well, good morning, everyone. It's a pleasure to speak to you again. Hope you're all well. My background for 40 years in business has been in a sales environment, mostly pitching for work. I think the biggest pitch I've ever done was I was a commercial director for a dairy, and we pitched to the biggest supermarket chain in the UK called Tesco, and we won a pitch for 400 stores for a dairy product called clotted cream, which we used to supply 2,000 pots every week to Tesco's. We ended up, because of, I think, a successful pitch, we ended up with 40,000 pots every week, which was a value of about £4 million, and we had that contract for 5 years. So that's probably the biggest pitch I've done. I've done pitches for investment, pitches for grant funding, pitches for, obviously, sales for major retailers. In my current role, I'd say, David, we probably see a pitch, 1 to 2 pitches every week.
Easy.
Working with mostly startup businesses, we hear pitches for investment. It could be a pitch for somebody who's looking to tender for a website. It could be a pitch for grant funding, lots of different pitches. We see some very good pitches. We see some not so good pitches. We see some interesting ones, some not so interesting ones, some compelling ones, some that we don't understand. We run a pitching competition within the STEAMhouse every year. We have about 100 students who enter it, of which about 60 pitch for a prize. And it's been a really successful competition. We are the 12th most successful university in the UK for graduate startups, all of whom pitch their idea to us. So we live and breathe sort of pitches every day of our existence at STEAMhouse.
Excellent. Thanks, Rich. So in terms of today's plan, what we're going to do is we're going to talk a little bit to start off with about the preparation for a pitch, and in particular thinking, what do we even mean by a pitch? Why do we bother doing a pitch? And thinking about who we're actually pitching to and how that might change the shape of the message that we give. Then we'll talk about the pitch itself and the process of the pitch. We'll talk in particular about something called the narrative art, which is really just a means of telling a story. But it's a very easy to remember way of making sure that you've covered all of the main things. We'll talk a bit about layout, how best to rehearse, how best to deliver it, and also leave you with some takeaways. And then we'll open the floor to a much more detailed conversation. So that's the plan. So if we begin with preparation, let's ask the obvious question. What actually is a pitch? Well, a pitch really is just a brief, hopefully very impactful synopsis of your whole idea, your proposition. but also your plans, your traction to date, your ability to deliver, and also making the ask, what are you actually asking for? And you'll see as we talk later on, it's really important that your pitch covers all of those areas. It doesn't just talk about your idea and how great your idea is, but it also covers your idea, how you can deliver it, and what you're asking for.
And I think that's one of the biggest problems, I'd say, with pitching, is that lots of really good entrepreneurs talk about the product and how good their product is, but then don't sort of ask for what they want by giving the sort of pitch. And that's one of the big problems that we see within lots of businesses that we support.
That's absolutely true. It's quite interesting, having been on the receiving end, as Rich says, of so many different pitches, and also speaking to other investors. Quite often, most people understand a good idea very quickly. An investor will understand, yes, that's a good idea. I understand where it sits within the market. I can understand why it should be a successful product. And straight away, their interest moves to, right, so how can you prove to me that you're the organization to make it happen? And that's so often the bit that gets missed. Now, most pitches, ideally, it's really helpful if you can deliver it in person. That might be virtual or it might be face-to-face, but it's always helpful so that you can actually talk to your slides. However, it's also important that actually if someone receives your presentation and you're not there, they can still understand it. And of course, it's often absolutely essential to raise money. So let's think about, why do we bother? Well, the first thing is, so clearly investors can see what they're buying. If someone is investing into your business, they are buying part of your business. So it's obviously very important that they can understand what your business is about, not just your idea, but also the people within the business, and understanding how that business might grow and how you can lead it to that growth. You'll also find investors want to see who they are backing. It's very important that an investor understands about you. One of the interesting things that I found, that when we were pitching for the money that we used to buy our business, so as I say, it was a very significant amount of business, because of money, because it was a large business. It was a business of 400 people. And in the end, as I say, we secured about $20 million of funding. But interestingly, the investors were most interested in the three of us who owned the business. Why was that? It was because they believed it was down to us to deliver the growth.
I think that's a very important thing that's often missed. You may pitch to investors with something that you think's a really, really good product and idea, but it's perhaps not suited to that investment or those investors, but they buy into you as a person, and they understand that you are investable as a person, and they can help you with potentially an idea that is more investable for them. So the actual sort of, to see who they are backing is, in my view, the most important thing when you're doing a pitch.
I agree, Rich. And as an extension to that, it goes both ways. It's also so that you can discover potential investors yourself. And it's, you can understand a little bit more about those investors and are they right for you? That's particularly important in the early stage of a business, because particularly if you're working with what we sometimes call angel investors, which are the very, very early stage investors who are often going to take a biggest risk. They'll often be doing it partly out of ethical and altruistic reasons, and they'll often be there to help as much as possible. And what you're actually getting from them isn't just their money, but it's their support, their mentoring, their guidance. So understanding who is the right fit for you is really, really important. You'll also find that sometimes a pitch, you're not successful. In fact, it will happen probably 4 times out of 5. You won't be successful. But every pitch is worthwhile because it really subjects your idea, your concept, your business to a really robust market test. Investors will give you really unbiased feedback. It's really powerful feedback. And they'll give you feedback on all of the elements of your business. So not just the front end bit, not what you're selling, but also they'll give you feedback about your team. They'll give you feedback about your growth plans. They'll give you feedback about how you think you're going to deliver something. And that can be invaluable. So simply going through the pitch process helps you refine, helps you focus, helps you streamline your ideas. So it is worth concentrating on a good pitch deck because everything else tends to follow from there. Now, when do we need to pitch? Now, obviously, the way in which the sort of financial markets work in different countries may vary, but broadly speaking, there's a similarity in most countries. And when you're looking to raise money, where you tend to normally start is with your friends and family. You might, beyond that, start to move into crowdfunding, where obviously you're getting a lot of people to take a potentially small share of your business. You may then move to these early stage investors. So this might be a group of 5 to 10 individuals. Quite often they've done quite well and they've sold businesses themselves and they're quite keen to give something back. And so they may be the first early stage investors in your business. And they are sometimes called business angels, literally because they're almost acting like an angel to the business. From there, we start to move into what we class as the institutions. And you'll often hear of the phrase Series A. And I know a lot of you are quite advanced businesses, so you'll know this. But this is really the whole venture capital world. And actually, that then covers all the way through to Series E. So this is effectively institutional investment. There's also debt and potentially private equity if you're a more established business. What is the underlying point? In all of those instances, you need to pitch. The pitch might be different, but it's still fundamentally important that you're getting your idea, the understanding of how you're going to deliver that idea, and also the ask that you've got of those people. You need to get that across in the means of a pitch. Even the bit with friends and family, you almost do a variant of the pitch. If you're just talking to someone in a coffee shop and it's someone that you know, and you summarize your business, you are still, in effect, pitching.
And I think one of the most important things with that is consistency across all of those sort of facets of investment is really important for the business going forward.
That is so true. Tell the same story. It might be a longer story at times if you're pitching to Series A VC. It might be a short story if you're talking to someone in a coffee shop, but it still must be the same story. And we've had experience and examples here within STEAMhouse of people who've ended up pitching because they were sitting next to somebody else on a train and they were interested and they secured investment just from that. So always have it in the back of your mind. So an extension to that is that it's really important that you understand who you're pitching to, because potential investors, friends, angels, funds, institutions, in all those instances, their motivations may vary depending on who they are. So think very carefully about your audience. They may all think a little bit differently. So for instance, an angel, one of these early stage investors, will think very different to a venture capitalist. Quite often angels, for instance, are driven, as I say, by reasons of interest or altruism. They might be more interested in the fact that you're doing something that is for societal good. They might be interested in that they come from the same region as you and they're trying to promote that. Whereas a venture capitalist, well, they're actually fundamentally representing other people and they're representing the people who put the money into their fund. Entrepreneurs will act very differently to asset managers. They might be much more predisposed to risk than an asset manager might. So you might more openly discuss risk with an entrepreneur than you would with an asset manager. If you're talking to someone about their own money, an individual's money, they may actually have different motivations. Again, they may be more driven by interest. Whereas if you're talking to someone from a corporate perspective and they've got fundamentally someone else's money, then they have to be a lot more guarded. There's a big difference between people making personal decisions and in some instances, rules of funds And it is important sometimes to understand that if you're going for more institutional investment and you're pitching for that investment, understand what the rules of the fund are, because there may be constraints on geography. There may be constraints on what sectors you're operating in. And you don't want to go through all of the effort of the pitch to suddenly find that they look at you and say, you're not in our region, or we can't back that because we're a fund that only focuses on green technology and your business isn't perceived as green. So do your homework, find out the names, find out the thesis, find out what the funds are, understand if they're portfolio companies, who have they invested in before? If they're angels, try and look on LinkedIn, find out something about them. If you're pitching in person, it's often great to be able to have a coffee with them before and just get chatting.
I think the homework part is really important. You know, if an investor turns round to you and says to you, how do you know I'm the right investor for you? You need to have done your homework. You need to sort of turn around and say, because I know last year you invested in this company, and since you've invested there, their sales have tripled. You need to have done that homework. If you sort of answer that with a blank, your sort of pitch won't go any further.
That is so true. And bear in mind as well that investors are human beings. And so, you know, play to their ego a little bit, make them feel good, make them feel important, make them feel that they can bring something that you need. And very importantly, and you'll be amazed how often this happens, remember, investors don't have to invest. If they're deciding not to invest in you, don't turn aggressive on them. Don't try and force them into an investment, because actually they may not want to invest at this point, but they might want to invest later. They may also, it might not be for them, but they may know people that it is for. So always sell your idea. Never impose your idea.
We have, you know, within our pitching competition, we have lots of entrepreneurs say, you need to invest in this. You must invest in this. Well, so the sort of the blank and honest truth is they don't need to, and they mustn't, you know, if they don't want to, and they won't.
Yeah, it's often a switch off for me when I've been in these situations. If someone said, you have to invest in this, I just the principle of being told what I have to do, I don't particularly like. So let's talk about the pitch itself. So you're all prepped. So you know who you're pitching to. You've thought about the motivations. You've done your homework. You're ready to tell your story. And actually, that's what a pitch is. We sometimes talk about something called a narrative arc. And effectively, it's a story. Everybody likes stories. Stories of how we communicate to each other. So simply tell a good story. Every point you make should flow logically from one to another. So you start by saying this, which means this, which means this, which means this, so that. And it tells a very logical story. Now, the way that we recommend to do this is to think about it in 3 parts. The first part is about getting their attention, which is really about highlighting the opportunity, selling your idea, explaining why your concept is different and why it adds value. However, don't just do that. The next bit is really important. Once you have done that, build their confidence. Demonstrate that they can have confidence in you, that you are going to deliver this business. So that means this section is all talking about how you understand the market, how you understand how you will deliver your services, how your team will help you do so, and how you intend to grow. And then the final bit is making the ask. There's no point going into a pitch if you don't ask people for the investment that you need, but make sure that you're asking and asking them because you're proving, yeah, what do I need from you? Why? What's it going to unlock? Very importantly, why now? Now, really important point is divide your pitch into 3 bits and give them an equal amount of attention. So get their attention should be 1/3, building your confidence should be a third, making the ask should be a third. Don't spend all your time on the first one. As Rich and I said earlier, people understand ideas really quite quickly. And if you oversell your concept, but undersell your ability to deliver it, people aren't interested. And similarly, if you can't have a good reason as to why people should invest, and you can't tell them what you're going to do with their money, they won't have confidence to invest in you. So getting the balance right and linking them all together into the narrative arc is really important.
We see lots of pitches which investors sort of, they understand the idea and they love the idea, but they sort of critique that they didn't get to understand the person and didn't get to understand the sort of confidence that the person brung, and that person could drive the business and their investment forward. And that's something that is always a problem. And then they don't make the ask, or if they do make the ask, they don't understand what they've got, how much money they're asking for, what they're going to spend the money on, how they're going to spend the money, when they're going to spend the money. And that's a big thing, because as David said, especially technical businesses, they can talk for 10 slides on the product, but not the features, not the benefits, not themselves, and not sort of how much the money they need for investment and what they're going to spend that money.
Absolutely. And I own my time. I think I've invested directly as an angel in 11 businesses. I've been on the board of 4 or 5 of those, I think. And in that time, I have realized that actually, more often than not, it's the people and the planning that's made those businesses a success rather than the idea. And that has been a lesson hard learned. So let's start with getting their attention. So this is about keeping a simple message, but getting it out there clearly right from the start. It's often good to start by telling them about your purpose, your motivation, but don't overplay it. Don't use jargon, don't use cliches. But if fundamentally your business is a green and sustainable business, then don't be afraid to say that you are motivated by that, and that is the driver behind your business. That straight away gives a degree of authenticity to you and shows you're passionate behind the idea. So explaining what motivates you is very important, but again, don't overplay it. Quickly then move into what is the problem in the market? What is the market gap that your proposition is addressing? If you remember, we talked about this with the value proposition. So for instance, if it might be that, again, you're producing, sake of argument, a sustainable clothing brand. What you might be saying is there's a problem in the marketplace because actually there's a demand for sustainable clothing, but it's not affordable. So you've developed a technology that brings sustainable products into an affordable market. So you outline that market gap, and then you demonstrate how your product or your service addresses that gap and meets the need, meets the value expectations of that customer. It's also important at that point to make it clear that you know who your customer is, and that you can demonstrate that that customer will understand that they are getting value from your service. So it isn't just about the features of your product or service, it's demonstrating that your product and service will deliver value to your target customer, which of course is what we talked about within the business model canvas. So that's your first bit. Nice and simple. What's driving you? What's the problem in the market? What is the solution? How does your product or service deliver against that? And what is the value it delivers to a nice and clear and segmented marketplace? Okay.
Again, one of the problems with businesses, rather than the value proposition, they just list lots of features of their product. You know, if, for example, McDonald's were talking about their value proposition, it's not burgers, fries, and Coca-Cola. It's about fast food, convenient, served on in reliably. That's their value proposition, not the actual product that they're looking to sell.
So hit them hard with that first bit, but remember, don't overplay it. I often think this is the most important section, which is building your confidence. And certainly as a fairly experienced investor in the time, this is what we're looking for. This is where the investors feel, right, these people can make it happen. So the first thing they expect you to know is about the market and your ability to define the market that you're in, illustrate its size, its realistic size. One of the worst things can be to show that it's £1 billion market and you're going for the whole of the £1 billion market and there's just you, because nobody believes you'll be able to do it. So you have to segment the market to something reasonable. Also demonstrate that you understand how the market is changing. Nobody's interested in information from 5 years ago. They want to know what the trends are within the market and any insights that you might have. Also, properly identify your competitors, real competitors. So it isn't always necessarily that you're going to be competing with Apple, but understand people who are in a similar space to you, who are trying to do similar things to you, but make it clear how you differentiate for them. So make it clear that you actually know the space you're operating in. The next bit to show is your route to market. So how are you actually going to get to the markets that you want? So you need to understand earlier who your customer segment is. How do you access that market? How are you going to be selling to your customers? What channels are you operating through? Are you going to be online, etc., etc.? You recognize all this. This is the same material in the business model canvas, just put into a pitch. One of the important things, again, in a pitch as well, is if you have traction, traction's really important. So if you've already got contracts, you're already working with people, please tell the investor. The next bit, operation and delivery. How are you going to make your product? How are you going to deliver your service? What resources, support, partners? Again, you recognize from the business model canvas. But this is showing investors that you already have thought these things through and you are going to make it happen. Finally, your team. It really is important to talk about the team, but really in the context of what is your experience, who else is supporting you, or even who do you need? It might be that you're using the investment to build your team. We quite often find, particularly in technical businesses, where they've built a very strong product, but they know that they might need sales or marketing resource. That's absolutely fine because it demonstrates you're in control. So demonstrate how you will be able to deliver success. Also, be prepared to say, right, okay, I don't know enough about this space. So actually, in a particular instance, I've gone to a specialist. So you might have almost a group of advisors. So it might be important that you are opening a European market. So you might have got a European advisor. Build this into your part of the pitch.
I think the one sort of caveat with that is don't be too overconfident. Be honest about your deficiencies and your lack of knowledge of certain parts of the business, and be humble towards that. That's one of the things that we see. We see lots of entrepreneurs who are a little bit overconfident.
Yeah, the confidence we're talking about is the confidence of the investor. It's building their confidence. They need to be confident in you. And it isn't about you being overconfident. I completely agree with that. So the final third of your pitch is about making the ask. You'll be amazed how many pitchers just stop. They'll tell you about the product. They might tell you a bit about their growth plans, and then they stop. It's really important that you make the ask. So you need to talk about the financials because you need to explain your business model. You need to explain how you're going to be deriving your revenue, and you need to give an indication of what your growth plans are going to be, which is normally at quite a high level. Don't get caught in the details. The details are to be dealt with outside the pitch. So keep it very high level, probably revenue, probably to a certain extent profitability, and break even. Not a great deal more than that. Then, most importantly, demonstrate the effect that the investment will have. What is that investment for? Why are you asking for that money? So if you're showing, for instance, that actually, if you get this investment, you'll be able to put a marketing plan together, which will unlock a new market, that is a much better message to send to an investor than just saying, I need some money. You might alternatively be saying, actually, I need this investment because I'm going to invest in new machinery. And again, that will increase my speed to market. The real critical thing is, if you're asking for investment, make it clear you know what you're spending the money on. Also demonstrate that the investor is quite critical to that. What a lot of investors like to see, and again, it depends. Sorry, hello? Can we go back to it? One of the things we were saying is that one of the things that you want to look for is to show that the investor, when they make that investment, they've transformed your business. So it might be, again, that you're demonstrating you've got everything set up, but just with some extra additional investment, you'll be able to kick on to the next market. That's really good for an investor, because an investor will look at that and go, actually, they've de-risked a lot of it. They've done all the hard work. I'm going to come in and then I can actually move it on much faster. Finally, remember to summarize it. Capture what you've said. Capture those 3 messages very powerfully. And also, if you're asking for investment, it's quite often important to give just a subtle hint of a time-bound reason for investing. You want them to invest now, not in 5 years' time. So demonstrate that if they invest now, they stand a better chance of getting more value, i.e., what they'll be able to do is get a bigger chunk of your business, comparatively speaking, but then you're going to really grow. It's a little bit of a balance how you do that. So get their attention, build the confidence, make the ask. You might recognize all the way through we were talking with this, that actually a lot of the elements that are in the business model canvas are what we're actually using as almost, if you like, the basis of the pitch. And that is exactly the case. So the business model canvas can really help you. So when we're talking about getting their attention, you're really talking about the value proposition, plus a little bit around the customer segment that you're targeting. When you're talking about building confidence, that's all the work that you've done at the front end about the customer relationships, the customer segments, the channels, and it's the work that you've done at the back end around the key partners, the key activities, and the key resources. And when you're making the ask, you're demonstrating that you understand the cost structure, your revenue streams, and why investment will unlock the potential of the business that you've got. So actually, your business model canvas, although it's different to the pitch deck, actually has a lot of information that you can use for your pitch deck. Now, so we've got the basis of a pitch deck. By the way, one of the things I would say is you might be saying, well, how long should a pitch deck be? It all depends. I would still stick with the same approach. So always get their attention, build the confidence, make the ask, and go through those same criteria that we've been talking about. Even if you're doing it in 5 minutes and you're doing it at very high level, or if you're doing it in half an hour because you're doing it in detail. But working through that in an organized, logical manner is a great way to tick all the key points that an investor or someone looking to buy your services or whatever would like to see, because you make it clear. So let's talk about layout and design. One of the things that I find with layout and design is don't confuse people, particularly on a pitch. Pitches are important to show you're creative, particularly as a creative business, but don't let your creativity run too far and it becomes confusing. So generally speaking, keep your logo in the same place. Don't have your titles jumping around all over the place unless it's by clear design, because it distracts the audience. Try and stick with the same font group and the same palette. So what you're not trying to do is use loads and loads of different fonts. It confuses. Stick with the color palette that you've got as an organization. So if your organization uses certain colors, stick with those colors. Think about the colors that you use. You sometimes find that green is generally used as a connotation for something that is good, that is positive. Red can have a negative connotation. Now, it can change if you've got a red logo and whatever, but be careful if you're showing a graph, how you use green and how you use red. Use images, use diagrams wherever possible. There's more font, there's more text in this than there would be normally, but that's partly because we're trying to make it nice and clear for people who read this afterwards. But generally speaking, where you can demonstrate something in an image or a diagram, do so. Signpost using color changes or logos. You might notice on the previous slides, go back to the previous slides, look in the bottom left corner, and you'll notice that the logo of the narrative arc works through all of those slides, so that subtly you know where you are within the presentation. Similarly, we use the same colors here when we're demonstrating how the business model canvas helps. And having that consistency and logic behind it makes a big difference. The other thing is to break your text into logical blocks. Let's go back again. If you look at this slide, for instance, what you have is 3 clear blocks. So you remember subliminally that there is something on financials, there's something on the investment, there's something on the summary. If you run it all together, people don't understand you're trying to make 3 points on that page. So think very carefully about how you lay things out. Design is very important, but remember the design is there to serve a purpose, not just for the sake of the design. So think about the purpose behind all of your slides. And is the design helping that, or is that getting in the way? The final point, sorry, Suzanne, final point, don't cram too much onto one slide. Let your layout breathe. The worst thing can be people say, right, okay, it's a minute a slide, so I have to do 5 slides. Or it's 2 minutes a slide, so I have to do 10 slides. No, actually, you might find that one slide just has 1 point on it. Another slide might be quite complex. So don't get dragged into this idea that you have to have a certain number of slides. What you do is you have to be very careful about your timing. So have the right number of slides for the timing that's appropriate to you. Because the one thing that investors are really, really sharp on is timing. And if you go on too long, they may stop you and you may not get your point across. Great.
Just to add to that very, very briefly, please be realistic in your pitch. If you've got 5 minutes, you're not going to get through 20 slides. And then just one other thing that we see very often is too much text on a slide. If investors or people you're pitching to are reading your text, they're probably not listening to you and you've lost them.
Totally agree. Rehearsal and delivery. Practice, there's an English phrase that says practice makes perfect. And it is just practice, practice, practice. Every time you pitch, you get better. And actually, that's one of the reasons for doing pitches, because it is quite nerve-wracking when you first do it. So the more times you do it, the more confident you get. Practice on your family and friends.
Just going to add to that, and please go out of your comfort zone on this. Don't sort of just do your pitch in front of people who are going to inflate your ego by telling you how good it is. Perhaps be prepared to do it to someone who really will critique it. You need honesty at that early stage, because if it's your husband or your wife or your sister, they might say it's brilliant when it may not be. So please choose people who will be really honest about your pitch and will give you constructive feedback.
And the most important thing is just keep repeating and improve it until you know it pretty much backwards. What I tend to find doesn't work is people who work off scripts. Because if you work off scripts, you either forget them if you're trying to memorize them, or it comes across very clunky. If you just get to know the material so it's second nature, then actually you're not worrying about what comes next because it naturally comes into your mind. It also means that you can actually nuance things as you're presenting. So if you get some clues from the audience, you can change it. You can move it up, you can move it down, and it just creates a much more comfortable, naturalistic style. On the day itself, Be confident, always be prepared to be enthusiastic. One of the things that we always say with people is that if it all goes wrong, actually, if you're enthusiastic, if you're positive, people respond really well to that. There's an English word that says waffle, and what waffle is just randomly going on about nonsense. So be very clear and to the point. And when you get asked questions, and Rich said this earlier, answer them directly. You know, even if it is something that's a weakness, if you try and lie and make up answers, you dig yourself into a bigger hole.
And I think very simply, if you don't know the answer to a question, please tell them that you don't know the answer to the question. There's nothing wrong with that at all.
Some investors almost want to know that. They want to know where your skill set is and where it isn't, because they might be able to bring that extra knowledge. And as I say, be enthusiastic, be positive, be authentic, be you. It's really important you're you. Again, over here in the UK, we have lots of TV programs where people are pitching and they seem to think they know things about business. Don't pretend to be somebody else. Be yourself.
And be humble.
And be humble. Absolutely. So what are the key takeaways? What have we learned from this? A good pitch will always improve your chance of success, because it's always good to actually know your own business. Think about your audience. Think about their priorities, not yours. Tell a simple, clear story. Have a clear structure, often with a narrative arc. Get their attention, build the confidence, make the ask. Keep the format clean and professional. Don't over-design it. Practice and iterate. Be enthusiastic, be honest. And good luck.